Welcome to TradeGameGuy.com. This is John's Reports for the 1st of July. We finished strong for the end of the month. Closing out there at 30.47. We began the month at 43. Big improvement. But that said, we saw that the Fed eased their balance sheet during this soft period, but all that means is they have fresh powder to drive things further back to where they intended. The shakeout starting to make a little bit of an improvement here. Of course, we've seen the S&P has been weak because it is a broader index, whereas the NASDAQ has been much cleaner. Shakeout rise as well as the decline. Now we're starting a new tick back to the upside. Complete reset here. We didn't move to an oversold with our red DOC or anything like that, but it still gave us a significant enough reset that we're not in any way, shape, or form overbought, and we are at market highs. So, given that and the continued concerns, pretty darn good stuff. Your standpoint, nothing going on particular special with that at this particular stage, though I think that it's probably going to be poised for breakout, simply because that further benefits U.S. as well as certainly an indication of the sporadic nature of the move. Oil getting back up to the upside of the consistent range right here until there's some kind of breakout maneuver as far as the economy or there's some indication. We did see some drawdowns of inventories in that, but that's been a lot of production cuts and reallocation. So some of that glut has been sucked up. What we look for next is the drive up, and it'll probably be led by gold early on. That would be what I had suggested from, as long as we've been going through this, we could see the potential for new breakout taking place, and of course now we are at new highs, and not surprising, and this got a long way to go. So anyone who thinks that gold's move is done, no, it's just begun, barely even begun. Simply because it's going to be as soon as a point comes where we start to monetize. The same thing happened after the influx of TARP money and everything back in 2009. It took a few years before things settled out, but then it started to get converted into real assets, and that began to drive what could have been inflation had we not had a significant reduction in energy prices. Doubtful that's going to have the same effect going forward, but we'll keep on top of it either way. From an intraday standpoint, it was great. We met with some new positive extremes that set up new support and resistance points. Turned to be very effective, so we started off with a series of positive extremes, began right through here. We built back up, and of course, as soon as it gave the signal coming back, we went right back down to it. That was around the 3054 area. Then we ended up with our nice orange dip going across, and that just, let's grab that a little tighter. There we go. And that just pushed us right back up and created a whole nother set right around the 72, which we had already had before. So no shock with that. We had a 69-72 combo. 72 is fine here. And then also a new series started at the 81 level, which did come back and fill in the post-market immediately after that. So we would look for late traders coming in from the European session, and that to probably drive us back up towards the highs again, retest those levels. So reset right here. Same with the steel coming back from below. Everything you look for from a rebuild. Not to mention the 50K. 50K had, bought this right back down here, right below the 3,000 level. Here we are at 84-ish, achieved the 3101, which means it was over 100 points. You can see the new stops pop in as it goes. This is the Opus T program. So coming off that stabilization, very clean signal as far as the buy setup within this, and you can see still plenty of cyan below red, which indicates that even though you've seen this dip, all that's doing is just easing higher potential overbought which will suggest that we potentially have the ability to climb back up. Got to see the steel move back above the negative 13 would be the impetus drive for that to continue forward. Did create some positive extremes within it, all the way down here at the 3066. So there's a broad range for it, but well within the expectation. So beautiful action to end the month, to start up the preparation for July, and then we're going to start getting into some serious electioneering and the impact that's going to have, and that's where the geopolitical aspect of things will start to heat up, because people won't think that there's disarray in that, are going to try and take advantage of it. So we can look for hot spots to pop up in that, and that will certainly create more dynamic. But for now, devaluation causes the market to rise right in line with our expectation. As always, though, I will keep us updated on the Skype chat and put up any charts that are relevant. Trade well. We'll talk to you later.